Hey guys, Don Durrett, Gold Stock Data. I posted a list on X today of companies with development projects, and I decided to share them with you. So there's 33. There were 32, but I added two names. So we're going to go down the list. Um, Often I'll explain what these numbers mean, upside, downside, quality. Today, I think I'm going to skip it. I'm just going to do the 33 names. Hopefully, you guys are aware of what these numbers mean. Um, LS is these are development late stage, MP's a mid-tier producer, NP's near-term producer, junior emerging mid-tier. That's what these categories are. So there are some producers, but these are producers with significant development projects that really these companies depend on development projects. So I would say every company that I'm going over today depends on a development project. Some of them are near-term producers, so it's going to depend on the ramp up of those projects, but they're not in production yet. But the building and the rollout of those projects is what is going to give these companies value. So every one of these 33 names is dependent on a project that they're building. And the upside is significant. You see, there's a lot of fours. Um, I I will say green is the top 25, which is the best, and blue is the top pick. And the top picks are not quite good enough risk reward to be green. That's why they're blue. And then the blacks are not, if it's a three, it's not blue or green. That means the risk reward is somewhat high. That's why we have a 2.5 here. The higher the number, the better. Um, we have another 2.5. Other than that, there's only two on here that are not um, five baggers or better. Four is a 10 bagger or better. Three is a five bagger or better. 3.5 is a likely five bagger. So we're gonna, oh, that's right. I'm just gonna do these one at a time fairly quickly. So we could get through this 45 minutes or less. As far as the size goes, the market caps, I can sort it really quick and then we'll go back to alphabetical. So we only have seven that are under 100 million. So most of them are fairly 100 million plus. And we only have five that are over a billion. So there's a big gap here between 600 million and then 1 billion. So there's a big gap. So we go one all the way up to Discovery, 2.3 billion. The average is looks like around 300. The mean is probably 200 million, which is kind of the sweet spot. I mean, the sweet spot for me is like 50 to 100, 50 to 100 billion. So like 1911 to maritime, these would be kind of my sweet spot. This is where you can find some really nice 10 baggers. Some of them can have high, very high risk, of course. I wonder if we should do alphabetical or go by size. Maybe it makes more sense to go small to big. Why don't we do that? We'll do it. We're going to go by market cap, fully diluted market cap. So the first one is Lahontan. Lahontan has a project in Nevada, 2 million ounce. Most of it is oxides. I think more than half is oxides. I think it's going to get to at least 2.5 million open pit. Three areas, one big pit for the first 2 million, and then they have a couple other exploration areas. I think it's going to get to the first 2.5. It's really cheap. Got a market cap of 32 million. Finally got over 30. 11 cents this thing, or um, it's 8 cents US, excuse me. Um, it's it's a development project. The one thing I want to show you real quick on development projects uh, um, is that you want to make sure that they check all the boxes. So it has to be a strong project. and all the ones on my list, well, I'll tell you if they don't check any boxes, we'll check it. So the grade has to be sufficient, recovery rate, mine life, economics, MPV. You don't want the MPV to be the same as the CapEx. You want the CapEx to be, excuse me, you want the MPV to be twice the CapEx. You don't want these two numbers to be the same. The MPV is your return, net present value. You want it to be much higher than the CapEx. You don't want the AISC to be too high because it's a high cost mine, and you want the IRR to be above 25. You want it to be at least a 10 bagger. Now, some of these stocks on here are threes and 2.5s. So I can talk a little bit why why I like them. They're not. We want these development projects. The reason why you want 10 bagger is so because dilution. If it starts as a 10 bagger, if it starts as a 5 bagger, then dilution could take it down to a 3 bagger. You don't want that risk. Plus, you're taking a high risk. You want a good return. Location is very important, ideally in a mining district or mine from the country. Strong management. Um, 4 and 5 are the hardest ones to find. Strong management teams for development projects are somewhat rare because um, a lot of them have CEOs that have never built these projects before. It's like their first one. They don't have a ton of experience. Um, and so this is sometimes we gamble a little bit on management teams. Good team, good board, strong path to production. This is another one that's tends to be difficult to find. We want a company that has a very strong plan. They're telling us exactly what they're going to do, and it has a strong path to production. We know exactly steps A, B, C, D. We know what the steps are. They tell us that they're going to do them, and we're just waiting for them to follow that. A lot of times, these companies they do not have a good plan, or they don't have a plan. They don't have a timeline. We want those, and the strong insiders if you don't have strong insiders and it's a really quality development project, those are the ones the sharks are just going to go in and swallow. I've seen it 9 out of 10 times. If you have a really good project, there's a 10 bagger upside, and the insiders below, say 15%, that company's toast. There's just no way they're not going to, they'll sell. They'll sell. It happens 9 out of 10 times. So you need all of these. You need all six of those. If they don't, then you want to lower your allocation. Um, Sometimes you can make an exception, but when you make an exception, don't um, uh, don't over allocate. Okay, I just want to double check that. Right. So Lahontan, they it's not going to be a high capex, but we have a PEA on it. They're 2 years out or less of being construction ready once they get their permitting. The CEO, Kimberly, told me, don't worry about the CapEx. I'll, I'll get this funded. But CapEx is going to be 125 to 150 million, which is somewhat high, it's quite high. And they have a 32 million. So that worries me a little bit. That's kind of a red flag. Um, but I think the risk reward here um, is pretty stunning. When you can get a project in Nevada with huge upside and getting it this cheap. And they don't have to spend very much money to get it construction ready. I think 20 to 30 million dollars over the next 2 years. They have a PEA coming out, updated next in Q1. Um, I think it might be a PFS. And then they're working on permitting. Sonoro. So Sonoro is very cheap, $33 million. 1 million ounce project, but they've only drilled, I think, 25-30% of the property. They're basically have held back. They basically found a million ounces, oxide, open pit, low capex, high insiders, and they basically said, okay, we have enough gold, let's go build this thing. Instead of wasting money and diluting shares, so they have 297 million shares, so they're not highly diluted. And now all we're really left with is the permit. It's in Sonora, which is in a good place. Sonora is either the first or second biggest districts in Mexico. It's a pro-mining district. I know Chihuahua's third, Sonora, and there's one other one, the top three, but it's one of the top two mining districts. It's in northern Mexico. Basically, it's not very many people live there. It's like a big desert. It's actually a very good place to mine. Um, so it, once one company gets a permit, we're waiting for somebody in Mexico to get a permit. Once one of them gets it, I think Sonaro and Silver Tiger, who are on this list, will both get their permits. They'll be two of the first ones to get them because they're both in Sonora. Um, so uh, I think they're going to get, find 1.5 million ounces. So they mine 70,000 ounces for 12 years. That's pretty good return when you're paying 33 million. Investigator, this one has a little bit more risk. I do have it as a top pick, but only a 2.5. There's not very many silver projects in Australia. It's in South Australia. They're coming out with the PFS here in Q4. This stock really hasn't done much. It's trading at 2 cents, 2.7 in Australia, 1.8, 2 billion shares, trading at $38 million. They have 57 million ounces of silver at low grade. Um, it's definitely a risk, somewhat of a risky play here, but I like the exploration potential. They have a 15-kilometer strike. I think this thing's going to grow in size. They're going to start off 4 million ounces a year, which is significant free cash flow to allow them to drill and find more and extend the mine life. So they're looking at like 4 million ounces over 8 years, which is 32 million ounces. If they can just hold 4 million ounces and extend it to 12 years, what I think they'll be able to do. The key here is permitting, water and power. Looking forward to the DFS. There's definitely some risk here. Nobody's really touching this stock. All three of these stocks that we started off, Lahant and Sonora and Investigator, and even the next one, 1911, investors are really not interested in these stocks. They're just, they're they're languishing. I mean, 1911, I mean, 56 million. This is a company that has an easy path to production. The True North mine has an existing mill. They have the resource. They have 1 million ounces. It's going to get bigger in size. It's just a matter of them doing some drilling to prep it up, deciding how they're going to restart the mine, putting a little bit of money into the mill to get it refurbished. It's not a lot of capex to restart this thing, but yet investors are ignoring it. I do have it on my top 25 as a B plus. I do like it. I just think all these stocks I think are pretty good spec bets. This first group, I think Lahontan will get built, so I would probably rank that one first, but I would probably rank 1911 after that, and then probably Investigator and then Sonoro. Um, just because Investigator has silver and there's no silver projects in Australia, and Sonora is kind of a small gold project. But I do think Sonora could easily be a 10 bagger, but I'm not super excited about small projects. Paramount Gold Nevada, I just put this one on my favorites list. Um, all these stocks are on my favorite list except for two, Bunker Hill and Silver X, but I added them to this list because I'll talk about them. Um, but I added Paramount Gold Nevada. The reason why is because their Grassy Mountain looks like it's going to be permitted first quarter of next year. Trading 62 million. So Grassy Mountain's a 1 million ounce project, but I think it'll grow. I think it's a 12-year plus project, 50,000 ounces a year. Could get a little bigger than that, but Grassy Mountain is not their flagship project. Their flagship project is Sleeper, and Sleeper is already 3 million ounces. I think it's going to get to four. I think they're going to probably sell half of it and do a JV with somebody because it's a pretty big project, 4 million ounces. Maybe they'll decide to build it themselves in stages, which would be nice, but it's in Nevada. Sleeper's in Nevada. It's oxide, low grade, but it's starting to get really interesting. Over $3,000 gold. Plus, Sleeper's going to grow in size. Like I said, it's 3 million now, going to grow to 4. I think it's going to grow to 4. Could get even bigger than that. So we're getting Sleeper for free. Grassy Mountain is worth 3, 4, $500 million, and their market cap is 62. They are going to dilute shares to build to finance the capex, but they only have 73 million. So then they do 100%, and they do 100% at 62 million. But I think it'll go up once they get their permit. I think it's going to go to 80. So then let's say they do 40% um, dilution and then borrow the rest. They'd still be in good shape. But I think the Grassy Mountain project will get permitted, will get built, will make money, and then we go focus on Sleeper. But getting Sleeper for free is kind of absolutely crazy. 3 million ounce project in Nevada, and we're getting it for free. That's insane. Um, Silver X, they're a small producer. They're currently producing about 1 million ounce a year silver equivalent. Um, about 500,000, 600,000 ounces of silver. So, but they have 100 million ounces of silver and another 100 million ounces of silver equivalents. They have about 200 million ounces of silver equivalent. That could easily translate into 5, 6 million ounces a year in silver equivalent. Um, and you're paying 62. But the reason why they're on here is because they have a second project, development project to expand production. And if they can figure it out without diluting us too severely, they have 267 million shares. We are going to get diluted when they decide to expand this. Small producer, they haven't been making money. They have been diluting shares, so there is some high risk. 20% insiders, which isn't enough to fight off a takeover attempt. But I don't think anybody would even attempt to take them over. Although I probably would, because I'm a believer in $100 silver. I wouldn't be afraid of their high cost. I'd basically just look at the value and say, wow, I'll take you for, I give them a 30% premium and try to take them out. Um, so, and so we're waiting for a plan. We don't have a plan yet on how they're going to expand production, how they're going to build that second mine. They're thinking about they have about three different choices, and they haven't picked one yet. They need to pick how they're going to do it. But SilverX has a ton of leverage, and that their next project is going to determine if they're going to be a 10 bagger or not. Norsemont, um, this is a really exciting project. They have two. This is down in Chile. They have 2.7 million ounces, and this project really hasn't been. It's been drilled a lot on surface, but it really hasn't been drilled at depth. I think this thing is going to be at least 4 million ounces, maybe five or more. I really like the exploration potential on this property. I think they're going to put out a lot of good drill holes. They just raised 5 million Canadian, so they're going to be drilling. And the capex on this is only 65 million. So they have like three steps left. So they're going to drill it first, do some infill drilling, expansionary drilling, and then do a, they're working on permitting, submit the permitting to get the permitting approved, which is so it should be permitted within 2 years. And the build on this thing's about 6 months or less because they already have a mill. It's in care and maintenance. So we're paying 65 million for 2.7 million ounces that I think is going to grow to 4 million ounces. So you're getting a really good optionality play here. I like optionality development stories. If you can get a development story cheap, I like it. Plus, I really like the insiders at 45%. I don't think anybody's going to steal that. Rob McEwen just came in on their last financing. I think that was a good showing. But it's next door to a nature reserve, which is a little disconcerting. But I've talked to the CEO 3 times now, and I'm confident that they're the permit that they have goes all the way back to 1988. I don't think they're going to steal it from them. Their existing mine, where they're going to restart this, is on a permit that goes way, way back. And then they have an exploration that goes back to 1999. Um, and I don't think that's going to get, revoked, if you will. Now, expanding permit beyond their 2,500 acres, So they're calling it a 5,000 hectare deposit, but I really don't think they can drill and mine on all 5,000 hectares. I think it's more like 2,500 acres, more like 1,000 hectares. But that's enough. As long as they can permit that thousand hectares, this could be a 4 or 5 plus million deposit. So I like Norsemont a lot. Argenta. Argenta is Frank Guster's new project down in Argentina, El Cuvar, that they acquired from Golden Minerals. Um, I got on early in Norsemont. I got in early in Argenta. I feel very lucky for both of those. I talked to when they came out with that, when Norsemont came out with their deposit of 2.7 million ounces, I went and looked at it and said, wow, this thing's interesting. 2.7, and it was valued at $28 million then. So I had a call with the CEO, and I bought it when it was at 28 million just from talking to the CEO. And then Argenta, as soon as it started trading, I thought, wow, this is the Frank Guster said this is the silver project that he always wanted a silver company, and so I got Argenta because not for their El Cuvar, but for the next mine. You always make your money on the second and third mine, and El Cuvar is not a big mine, but it could be one. It's like 60 million ounces of silver, I think, but it's maybe smaller than that, 50, somewhere around 50, 60. But if it grows in size, which I think it will, now they just had a really good drill hole. If it grows in size, who knows? Maybe this mine, this first mine could turn out to be a 10 bagger. But I've always thought that this was going to be a 2, 3 mine company. Um, Now their CEO is a geologist. I don't like that. But right now, that's kind of what they need because they need to double and triple. I don't know if they can triple, double the size of the deposit. And that first drill hole was amazing. It was like 40 meters. I want to say 1,000 grams per ton, something like that. It was a really good drill hole. Um, but I hope they replace the CEO because don't really want a geologist to be the CEO. Stellar, big project in Canada. I This one they have like 18 million ounces of gold. We're gonna have to wait for this one to get built. This one is kind of a long term. Um, they're working on permitting right now, um, but at a certain point, I expect these development stocks to all rip. So it's valued at $120 million and it's got 18 million ounces of gold. Back in, I think 2005, somewhere in there was a company called Rubicon. I think it was Rubicon Minerals. They had a deposit of 2 million ounces at 5 grams, and everybody thought it was going to be 5 plus million ounces at 5 grams, and it was valued at $2 billion. Again, the target was like 5 million ounces, and they only had two, and it was worth $2 billion. You can go ask AI about Rubicon Minerals. Well, anyway, that turned into the Madsen mine, um, and Rubicon went bankrupt. They went from 2 billion to bankrupt. And now we have a Stellar. They have 18 million ounces and they're valued at 120 million. You see the disconnect. So that's why I want to own these big development projects because at a certain point they're all going to go nuts well before they actually get built. Um, Rubicon was an early stage development project, early stage. It didn't even have a PFS. Basically had a maiden. I don't even know if they had a PEA. Um, Stellar is more advanced than that. So um, that's one of the reasons I want to own these development projects because if you have strong insiders and they're not for sale, these things can really blow up in value. Barton is in Australia and South Australia. They have two projects. They're working actually it's kind of morphed into three because they found this silver discovery, but their flagship project is the one that the reason why I like it is it's a 2 million ounce project, but they're drilling, working on permitting, but they decided that there's another open pit project where they have a mill that said, well, okay, we're going to start here. We're going to do the small project first, then the flagship second. But when they started doing the small one, they accidentally found this really unusual silver anomaly, which they're drilling now. So they thought it was a gold open pit gold mine. It was an open pit gold mine. They were trying to expand it so they could start making some money, get some cash flow, and then focus on the flagship. But now they're drilling the silver. So Barton, really interesting. Production's about 2 to 3 years away. A lot of these development projects are not overnight. Revival, I really like this project. They have three projects, three mines to build. So they're working on Merkur first in Utah. Um, I like the team at Barton. I like the team. One of my favorite teams is the Revival. Hugh, I can't think of Hugh's last name. The CEO, I think he's a kind of a rising star in the mining industry. I think he's going to end up building a big company here. He's just kind of getting started. Merkur open pit project, a lot of exploration potential. That's where they're starting. It's about 3 years out. After they do Merkur, they have Bear Track open pit, Bear Track underground. So they have three mines to build. Wouldn't be surprised if they acquire another mine before they get all three mines built. I think Revival is going to become a big company. Checks all the boxes. Next Gold, this might be the cheapest one on here. 133 million market cap. They have two 3 million ounce projects in good locations. One, I think, is in Newfoundland, and the other's in Ontario. Both projects are supposed to be permitted within the next 12 months. Both projects should be construction ready. Two 3 million ounce projects. A 3 million ounce project in a good location in Canada should be worth $3 billion. So we have two of them. That's 6 billion. So we got kind of a $6 billion dollar for me valuation, and they're valued at 133. So I said it's probably one of the cheapest one on here. It's crazy to me that Lahan's at 32 million. Um, they have a 2 million ounce project, and then going to three at 28, and then you have a 6 million ounce. But then I just said Stellar as 18 million ounces, but Stellar is a ways out. Next Gold, they could be in construction Q1 of next year. They're like right around the corner, and nobody wants to buy them. I haven't found any red flags. I have it as a green four, and I have it as an A minus. It's like, but I don't have the downside as a 3.5. So I'm not, but I do have it. I do think if all they have to do is build one of these mines, they don't have any debt. I don't think they have any problem. The capex on both of these projects is not high. I expect them to have no problem financing the capex in these projects. I don't think that's a red flag. I really haven't found the red flag. You guys down in the comments, if you know a red flag for next goal, let me know. I, to me, it looks fantastic. Silver Storm, they're getting ready to go into production here in Q4. The project that they acquired from First Majestic, they seem to have done a good job getting that project going. They had to drill it, get an understanding of the geology, refurbish the mill, and now they're ready to start it back up. The thing that's so nice about Silver Storm is that we're getting um, their San Diego project, which is basically a flagship project, 90 million ounces of silver. We're getting it for free because the mine that they're restarting is worth much more than their market cap, 150 million. Um, and I think San Diego is going to probably be a 4 to 5 million ounce a year project that they can, and they don't have to build a mill. It's in Durango. It's in the same state as the mine they purchased from First Majestic. So once they'll be able, so it's going to, they'll be fairly quickly to plan out exactly what they're going to do because all they have to do is dig the ore out of the ground and truck it over to the mill. So I think they're going to end up being a 6 million ounce a year producer, and they're currently valued at 150 million. So it's going to take some time to get San Diego into production. For us to get paid, well, what we want to make our mine. Remember, I said you make money on your second mine or your third mine. Their second mine is San Diego. Now, I don't think they're going to get San Diego into production for probably 4 years, maybe three if we get lucky. And we have permit risk in Mexico, of course. But San Diego has been drilled out. They're not going to have to drill that much there. Maybe they'll do two drilling campaigns, but they don't. There's been a lot of holes dug, so I don't think they're going to have to spend that much time there. I think, and then as far as scoping goes, I mean, this is an open pit. They're just going to dig that dirt out of the ground and ship it over. They might do some ore sorting. That's a possibility. They could reduce, how much ore they're moving and by truck by 20% probably using ore sorting. If ore sorting will work. Um, but yeah, Silver Storm's definitely an exciting story. I mean, I really haven't come across the stock so far on this list. I mean, and one of the reasons why I'm sharing this with you is the fact that these stocks are so cheap because I think they're all going to double fairly quickly once this bull market kicks into gear with the miners. It's like it's unbelievable to me that you're able to get these stocks at these valuations. I mean, we're going to look back in a year and go, "Wow, those stocks were cheap a year ago." That's my feeling. Maritime. Maritime is under construction right now. The hammer down, I think it's hammer down. Deposit just keeps finding really good grades. The drill holes have been really outstanding. So Hammerdown's open pit, but all the drill holes have been such high grade. It's probably those are all probably going to be underground. Um, but it Maritime's come up a little bit. It's 150 million. So now we're starting to get into market caps that are starting to get up there. 150, but they have very high insiders, 55%, so they don't have to sell. This is one I thought Newfound Gold should acquire, but Newfound doesn't want to give away that much equity because they have two mills and it would be perfect for Newfound Gold. It's in the same area in Newfoundland. But I think Maritime, the key to Maritime is going to be exploration success and expanding production. But I think they're going to be able to mine 50,000 to start. And I think they're going to be able to, with exploration success, I think they're going to be able to get that to 70, 80,000 minimum. Um, and so it definitely has 10 bagger potential. I have it as a blue four. I don't have it as a green because it's not a slam dunk. I don't have it as a B. I don't have it as a B plus because the resource isn't large enough for that. But I do think Hammerdown, like I said, the drill results have been really good. We just don't know how big Hammerdown's going to be, but they're gonna keep drilling holes there. Um, so I wouldn't call Maritime a slam dunk per se. It's a bit of a risk stock, but on the whole, I think it looks pretty good. Andean Silver, um, I really like this stock. 90 million ounces. They got it from a private company. It's an Australian company. It came out it was in Care and Maintenance. So private company was mining it, Care and Maintenance, and this Australian company came in and acquired it. And now they're drilling and they're putting it back into production. You can see I have it at green, so I like it a lot. B plus, 170 market cap, but it's a big silver mine. So we're not overpaying here. We're getting a really good deal. It prints as a 10 bagger at $100 silver. So Andean, it's kind of an unknown name because it's new. Like I said, it was a private company that they acquired, and there's another one called Andean Precious Metals that everybody confuses with, but they're a producer. Um, this one is a development play, but they're close to being a near-term producer. The next one on the list is Bunker Hill, which I added on here. Um, I added Silverex and Bunker Hill to the list. Um, Bunker Hill, it's a somewhat risky play. It's why it's not on my favorites list. But this is a property, Bunker Hill Mine, that's never been drilled with modern equipment. I mean, it hasn't been in production, I think, for like 50 years or something. And this thing it's been mined. I mean, it has a lot of levels. It's a historic mine, and I just have a feeling that they're going to find a lot more silver. Um, and so if they can find, say, 50 million ounces of silver and mine 4 million ounces a year, this is going to be a big winner. I like the management team. They have a ton of experience. So from Barrick, old guys that have been in the business for forever, a ton of experience. Um, and it's come up now. It's up to 175 million. They've had a lot of share dilution to build it, but they're starting off as a zinc mine, zinc lead, but I think they're going to pivot into silver. So they basically started there because it was kind of low-hanging fruit. But I think they know that the value is finding silver. And I think that this Bunker Hill mine has a lot of drill targets. And so it's kind of a spec bet that you think that they're going to find some silver. From my perspective, all they need to do is kind of break even, make some money, and just start drilling holes because any silver that they find is going to be really easy to put into production. Um, it's basically all permitted, so they're just drilling underground. So they find it, they can just move it, they can just create a stope and start mining it. So that's what's so exciting to me. Um, and so you have all these different levels, and again, they find some silver, it won't take long for them to put it in production. That creates some huge leverage. Challenger, one 180. They have three projects. The one project that I like is in Argentina, and they have two copper gold projects in Colombia or Ecuador. I think Ecuador. But I like the management team, and I like when you add up all three projects together, it makes sense to me. I think you're getting a good price. Um, the key is going to be management execution, how long it takes them to build all three mines, and so Challenger is definitely not a slam dunk. Rock Resources in Australia, Western Australia. Um, I like Australian stocks. I think that Rocks will become a mid-tier producer. They have 25% end setters. I think that's enough for them to stay independent. Um, they're 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 a near-term producer now, so they've been focusing on getting in production. They have a lot of exploration potential, which most of these Western Australian companies have. They tend to always have large hectares, large acreage with a lot of drill, a lot of exploration potential, and Rocks does. Rocks and Osgold, and which is right underneath it. It's interesting. They're right next to each other. They're basically twins. Osgold, I have a little ranked a little higher. Well, Rocks is a little more pricey. I have it as a three, and I don't have it as a top pick. Osgold, I have as four, as a four green with a B plus. So it's and Osgold, and the reason why is because Osgold, a little bit bigger project, a little bit better exploration potential, but Rocks isn't that far behind. It's a good pair. I like to invest in pairs, and then you see who the winner is. Osgold has a little bit more insiders, but those are two kind of the elite Australian development plays in Australia. They're the only two on this list. Um, there's a couple others, but I don't have them on here. But those are the two in Australia that I like. Thesis, very similar to Stellar. It used to be called Benchmark. Then Benchmark bought Thesis and combined the projects. But Benchmark and Stellar are very similar, big projects um, that they're advancing very slowly, 190 million. But these are the type of projects that could really take off if 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 the if we get a mania in the miners, if you will. U.S. Gold, they're close to their near-term producer. Um, it's still fairly cheap. It's up to $12. I forget. I think I paid like 350 for it. I got in early. I've been holding this for a long time. So that's what these developers do. If you get in early and they don't get taken out, and so um, now U.S. Gold. Um, it's a copper gold story. So you need the copper to keep their costs down. Um, but they have a significant amount of gold. It's kind of the opposite. A lot of times you have a significant amount of copper and a little bit of gold. This is the opposite, other way around. They have a project in Nevada, a big property that they're going to start drilling. So they're thinking of spinning it out. I wasn't really too excited about that. I'm going to meet with them at Beaver Creek and see if that's still their intention. I would prefer that they use the free cash flow instead of paying dividends. I prefer them to drill, use that money and drill Nevada, and then build that second mine. So we'll see what they're going to do there. U.S. gold isn't as exciting as it once was because it's up to $12, so it's up to 168. It was a lot better when it was down at 50 million. Um, but it's still a pretty good project. Aftermath, big fan of Aftermath, the Barangala project, 130 million plus they're adding more. It's probably going to be a 150 million ounce silver project, and the majority of the revenue today is manganese, which is kind of stunning. That big of a silver project, big silver projects are rare, and yet this is a manganese project. Strong insiders, Eric Sprott has a big position. It's going to take them a while to permit Barangala. So we don't have a timeline yet for them, which is kind of unsettling. I'd really like to have a better feel for when this thing's going to get permitted, when this thing's going to get construction ready. So that adds risk. But as a long-term play, say 4 or 5 years, I like Aftermath a lot. Silver Tiger, it's green. Always liked this project. Glenn Jessam, the CEO. The first project, so this is an open pit gold mine, but it's high grade silver underground. It's an unusual project. They want to do the open pit first, but if they don't get their permit this year, they're going to have to pivot to underground and then wait and do the open pit second. So I'll see Glenn at Beaver Creek and find out what they plan to do if they don't get a permit this year. I got to believe he's already permitted underground, by the way, so he can pivot to underground. But Silver Tiger, $200 million. It's a two mine project. Like again, open pit gold and then underground silver. So if they can't build that open pit gold mine, what kind of upside does it have? It takes away quite a bit of the value. So I have it as a green four because I think they're going to build both mines, but I'm assuming that. And so you're taking on risk if they can't permit that open pit. Heliostar, that was my number one pick at Beaver Creek last year, and it's done extremely well. It was really cheap a year ago. Um, and I think this is 200,000 ounce producer, and probably more than that. They have a lot of projects that they're working on. Ana Paula being their flagship, and everything kind of goes from Ana Paula. Everything else kind of an add-on to Ana Paula. But I think Heliostar, I have a green B plus, currently 284 million. So investors like it, but it's still cheap. I have it as a 10 bagger. I think Heliostar is still a star. Um, I worry a little bit about their CEO, uh, I think it's Charles Funk. I don't think it's Fred Funk. Fred Funk was the golfer. I think his last name is Funk. But he's young, and so I think this is maybe he's going to be like Hugh. He's going to be a rising star CEO. We'll see. But he's got a tough task. He's kind of on the job learning kind of thing. We'll see how he does, but it's not. He doesn't have an easy job. It's not easy to build these mines and operate these mines. Difficult task. Integra. So Integra, they're making money on their mines. So they were just Delamar. They were a pure development play in Idaho, Delamar, and they decided to purchase a producing mine in Nevada, the Florida Canyon mine. Florida Canyon is a high cost mine, but as long as they could make money, they could use that, they could leverage that for De La Mar, and they are making money with Florida Canyon. It is high. I think the ASIC's around 2,000, maybe higher, 2,200, but they are making money on the Florida Canyon. and they're putting a lot of money into it. They think that they can get the cost down. And that's really teaching it. It's really helping that company because it's getting them ready to build Delamar and then make money on Delamar. So the reason they're on here, so they're a producer. Heliostar, the reason on there is because of Ana Paula. Ana Paula's development story. And Integra's on here because Delamar's a development story. So these companies are producers, but they're really developers because they need it's the next project where they're going to really make their money. Rio 2 down in Argentina or Chile. I think it's in Chile. They are under construction. They're less than a year from producing, and the key to them is going to be phase two. And but I think they're going to pull it off. I like their CEO. So paying $500 million seems pretty pricey. Um, Prince is a solid five bagger if they build a second project. So it's not super juicy, but deserves to be on here. Osisco development. So this one's kind of pricey, 500 million, only a three bagger. But the reason why it's on here is because they're open pit gold, which they've never talked about at all. I think they have 10 million ounces on the surface. And at a certain point, I I could see them come out with a news release saying that because now there's ways to mine that surface gold using some of these stoping methods. Go Gold's a good example. I mean, they're mining 90% of that deposit from underground, and it's basically an open pit. So I think Osisko is going to go back and look at all that surface gold, and that's the reason why it's on this list, because I think, I mean, the company that owned that previously said that there was 20 million ounces of surface gold on that property. And the new management team came in and they said, we don't care about the surface gold. We're only focusing on the underground. So, and the high grade underground. So we'll see if Osisko, if gold prices get high enough, they got to start looking at that surface gold because there's a lot of it. Go Gold, they're a producer, but they're producing tailings in Mexico. But the real project is Los Ricos South, Los Ricos North. This is one of the best development projects. The one, it's interesting, Vizsla is right next to them. They're Vizsla and Go Gold. And then we got Discovery at the very bottom. I can talk about all three of those at the same time. Those are the three best silver projects in the world. Well, Aya and Skeena both have good ones too. Um, but so Go Go Los Ricos, those two projects are going to mine 15 to 18 million ounces a year. The capex for both projects is under 250 million. So they have low capex, high economics, high free cash flow. They're waiting to get their permit. I don't know what's taking them. They should have already gotten. It's an underground mine. It's been difficult to get permits in Mexico. We need that to turn. Vizsla, unbelievable silver project. They're going to mine, I think, 18 million ounces out the gate, but that's not going to end there. This is really going to be a 20 million ounce a year project, which is really, really big. And they're valued at 1.2 billion. The capex on this project was cheap. It was like $250 million to mine 18 million a year, which is unbelievable. You rarely see a NAV that much higher than the capex. The NAV was 1.5 billion. The capex was 250. And they're focused on getting that thing built. So Vizsla, unbelievable project, high quality. Aya is Boumadine. Boumadine's still early. We don't even have a PEA on Boumadine yet, but Zgounder was a great project, and I think Boumadine's bigger than Zgounder. It is bigger than Zgounder, but we don't know about the cost. Zgounder was silver only, which was amazing. Boumadine is polymetallic, but I think it's at least 50% silver. They also have zinc, lead, and gold, but Boumadine is very exciting. Montage is currently building. It's a 3-year build, but Montage is on here, so it's 1.4 billion. But there's another one I've owned from the very beginning. They have a really good management team. This is a really good project. It's their first mine. It's not going to be their last mine. Um, I wouldn't be surprised if they acquire another company or acquire another project before this project is finished because they have about 3 more years to build this mine. It's going to take them a while. They'll get bored. They'll look around. They'll buy another project. I'm pretty sure that's what's going to happen. I'm meeting with them with Beaver Creek, so we'll see what their plans are. Skeena was interesting. They changed their name to Skeena Gold and Silver because they have so much silver. But I really like this project. Skeena, they're going to start off really large, high grade open pit, but then they're going to have an underground mine underneath the pit that's going to, I think, surprise people at how big it's going to be. Um, and then they have the Snip mine, so they have 3 mines. So they're a lot like Revival, where they have 3 mines to build. I've always worried about Skeena getting taken over, and then Discovery at the bottom is my favorite silver discovery project, Cordero, which has 1 billion ounces. Um, it's we're just waiting for them to get the permit. It's in Chihuahua. As Chihuahua is a mining district, I can't imagine um, not them not getting their permit there because it's in a perfect place. It really is in a perfect place to build a mine, Chihuahua. Um, a lot of big mines there. The people I mean, that whole community is pro mining. So for them not to get the permit makes no sense at all. So the only way they wouldn't get it is if Scheinbaum is going to carry forward with the AMLO shadow ban. So in many respects, AMLO was breaking the law because in order for him not to give a permit, an open pit permit, he needs to change the law because in Mexico, the way that the law works is that if you submit a permit, it's supposed to be approved unless there's a reason not to approve it. They AMLO was in power for 6 years, and he didn't give one single open pit permit. It's basically a shadow ban. He couldn't get it through Congress, and he said, "Screw it, I'm not going to give you any permits." And she could be doing the same thing. Here we are. I thought we would see a permit in Q2, and here Q3 is almost over, Q2 of this year, and we didn't see one. And now we're in Q3, and like we still haven't seen one. It's like, what's going on here? And I'm talking about greenfield projects, which is the Cordero project is. I'm talking about a mine that was basically staked, drilled, and permitted. Now we have had some addendums where people have gotten permits for projects that were already in production before, but not a greenfield project. Haven't seen one of those get approved. So, and Silver Tiger is not a greenfield project, it's brownfield. It has a permit on the underground, and they won't give him a permit for the open pit. It's like, so we're still a lot of unknown regarding Mexico. We're waiting on that. Um, but these are definitely my favorite development projects. So I prefer to own producers first, and then these developers, I own the developers because they can have, 20 bagger potential, but they can turn into producers. I want to own as many producers as I can at a good entry price. So if you own a developer, it turns into a producer. That's another reason why I like them. See, but they tend to break my heart. I mean, every single stock on this list, I'm thinking I'm going to get a 510 bagger, and things can go wrong. I mean, it's amazing how many development projects have broke my heart. Usually, the reason why is because they get acquired, and a lot of times, not a lot of times, but sometimes they get acquired by like a Chinese company on an all cash deal, and they just steal it from you. You're sitting there ready to have like a easy 10 bagger, and then somebody comes and does like all cash private deal. So you could have not necessarily a Chinese company, but they could basically go all cash. And when they do cash, they just steal your shares. They just give you cash for your shares. That can happen. All cash deals are absolutely the worst. Um, so some of these will get taken over. Um, One of the reasons I like to own a lot of stocks is because when these companies do get taken over, I'm hoping I own the buyer. You want to own the buyer. There was one stock on here that I didn't mention. You guys are going to go, wait a minute, Don. How come you didn't mention Abra? Abra Silver is a development story. Why isn't it on here? Um, so Abra's not on my favorites list. And I created this for my favorites list, and then I added Bunker Hill and added Silver X. I should have added Abra. Abra deserves to be on here as well. So Abra is now like up to $700 million. I've owned Abra early. I owned it before they really had a big discovery, um, and when it really took off. And so Abra's up to 700 million. I just think it's going to get acquired. But if they don't get acquired, it's a solid five bagger, deserves to be on here. But the CEO, I don't think the CEO has the chops to build it. He's a geologist. He's never built and operated a mine before. He thinks he could do it. He told me, he said, if the board asked me to do it, I'll do it. Um, which is, I don't know if that's the right answer. The board asked him to do it. He should say, no, go find somebody with some experience. I mean, that's what he should say. Um, so I don't know. My gut feeling is that Abra will not. They might build a mine, but it'll get taken. Even if they build it, I still think it'll get acquired before they get to first pour. They could make a construction decision. They could do financing. They could start building it. But I don't even think it'll get that far. I think it'll get acquired before they even get to a construction decision. Um, I think that they've been dragging their feet the whole way, just drill, 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 drill. They never wanted to build and operate this mine. That's my gut feeling, and that they're gonna sell pretty soon for about $1 billion is my guess. 30% premium from here, and everybody that got in late, they're not going to be happy unless they like the buyer. Um, I think I'm going to like the buyer. There's not that many companies that are going to buy Abra that I don't like per se. Even the majors right now are all of them are pretty darn cheap. But I don't think, the big majors, Newmont's not going to buy it. Barrick's not going to buy it. Agnico, those companies are not going to buy Abra. So whoever buys Abra, I'm probably going to like it. So that's why I never sold my Abra, even though thought they would get acquired, because my gut is that whoever buys it, I'm probably going to like it. I'll probably be happy with the buyer. I'm hoping it's Fortuna. If it's not Fortuna, I'll take Kinross. I own either of those. Either of those is fine. Kinross would not be a good choice for a lot of people. Um, Fortuna would be much better. Fortuna's right next door. Fortuna's like ideal. Okay, guys, we're going to end it there. Thanks for listening. I'll see you guys next time.